Hey everyone, welcome to today's show, live show that is. I'm David Brannen. I'm a lawyer with Resolute Employment and Disability Lawyers. Today we're going to be talking about an important topic that affects people who are receiving CPP disability benefits and also long-term disability benefits through a group insurance plan at work. Now, this is an important area because it's a place where people often get caught off guard when they get approved for CPP disability. Usually in that there could be usually it's because there's a reduction immediately in the amount of long-term disability payments that you get. And you also may be asked to pay back a large chunk of money. There's also tax issues that we'll touch on briefly. So I'll break it down for you step by step, how it goes, things to look out for, some traps to avoid, these types of things. Let's dive in here. So, whoops, there we go. I'm going to reduce myself down here instead of seeing my big old head. Let's try this. Oh, that's a little too small. Maybe that is the way to go. Oh, well, whatever. Let's try this. Okay, let's dive into this thing here. So today's game plan, I'll just review quickly what we're going to cover. So quick refresher on CPP disability for those who may be new. Why your LTD insurer punishes you for applying for it. Pushes you, punishes you. They do punish you, but why the LTD insurer pushes you to apply for CPP disability. I'll talk about how the offset formula works once you get approved. We'll talk a bit about retroactive pay, this gross versus net issue that can come up with deductions of CPP disability. I've had a lot of experience with this. We can talk about that. And we'll talk about some policy traps that you need to be aware of. These are like fine print in your insurance policy. And I'll give you a checklist, a basic checklist that allows you to think through what you need to do. And of course, as always, I'll be taking questions after I talk about this. So put your questions in the chat if you have questions about specifically this topic, but otherwise you can put your topics in there, your questions in there, and I'll address them even if they're off topic, because we'll be covering any kind of employment or disability topic once I get done with this presentation. All right, let's do a quick refresher of CPP disability. So the basics. CPP disability is a benefit paid through the government of Canada's CPP disability or CPP plan, Canada Pension Plan. To qualify, you must have first paid into the plan and also been recently unable to work because of disability. If you get through those two hoops, so you've paid into the plan, you're recently disabled, you have to show that your disability is one that meets both severe and prolonged requirements. Essentially, that means you aren't able to do any substantially gainful employment. All right. Now, substantially gainful is basically defined as the maximum amount of money you can earn from CPP disability. So, in practical terms, it means you have to show that you're not able to earn around $21,000, $20,000 a year, that you lack the ability to do that. Now, it's important to note that CPP is taxable as income, and it also has a cost of living protection adjustment. So every year, CPP disability, your benefit amount is adjusted up, usually up by the rate of inflation. There's a formula, doesn't go up exactly by the rate of inflation, but there is a formula that will make it go up every year. Here's the key point: just because you're on long-term disability doesn't mean you will automatically get approved for CPP disability, and vice versa. Being approved for CPP disability doesn't get you automatically approved for LTD. They're very different systems and they have different rules. That's just important to keep in mind. Now, why do insurers push you to apply? And they do, sometimes appropriately, sometimes inappropriately, but either way, they do care about CPP disability. And that is ultimately because under most group insurance policies, almost all of them, I think I've seen one policy in my time doing this where they weren't allowed to offset CPP disability, but under most policies, LTD insurance is able to deduct the CPP disability payment from what they pay you. It's usually a direct one-on-one deduction. And it goes a step further. These policies are written such that they're allowed to make this deduction even if you don't apply for CPP disability. Okay, that seems really bizarre, but that is true. They are allowed to estimate and deduct what you would receive from CPP disability, even if you have not applied for it. That gives them a lot of power to push you to apply for CPP disability, because if you don't, they'll say, oh, that's fine. We'll just estimate that you would probably get $1,200 from CPP disability, and we'll just start deducting that from your LTD, even though you're not getting it. That puts tremendous pressure on people to go and apply, because otherwise you're losing money. Like, you're just going to straight up lose that $1,200 a month and you're not receiving it from CPP. All right. So while it's not like it's not proof that you are going to be approved for CPP. Getting approved for CPP disability isn't proof of disability for long-term disability insurance, but it does help. Certainly, if you're on an approved long-term disability claim and they push you to apply for CPP disability and you get approved, it certainly does help. There's no doubt that it helps. They can still ignore it because there are different criteria, but it can help, and that's another reason you would want to do it. Okay. Now, the offset formula is pretty straightforward under most of these policies. There can be two types of offsets in long-term disability. We won't complicate it. We'll just focus today on the primary offset, which is often called a direct offset. This just says in the policy that the monthly benefit amount will be reduced by income from the following, and it will list a bunch of things. Typically, CPP disability is in that list. All right. It does have to be in there, though. I have been surprised before that it was not there on one policy I've ever seen, one group policy, that is. But there is other fine print in there to have an understanding of when will the CPP be deducted and will not. Now, there's other earnings in addition to just CPP disability that can be deducted. Sometimes if you're doing a return to work, they may deduct the income that you're getting from returning to work, even if it's partial income. Sometimes they won't deduct it. One other area that gets tricky is, do they deduct the child's benefit? So when you get approved for CPP disability, there's also a child's disability benefit that gets paid based on your disability, not the child's disability. And it's often disputed on whether the insurer is allowed to deduct that from your LTD. Newsflash, they often do. Some don't, though. Some don't, but they often are allowed to. It will depend on the wording of the policy if they are allowed to deduct it or not. So it just boils down to how the policy is worded. There's nothing. This was fought in the courts over that they just for policy reasons. It was fought over that they should just not be able to deduct the child's payment as a matter of fact. But the court said that they are allowed to deduct it if it's in the policy. So it boils down to the policy wording. Another thing to keep in mind for the offsets is whether the LTD insurer can only offset the original CPP disability benefit approval amount. So if you originally get approved and the benefit was $1,200 a month, the question is, are they also allowed to deduct each year the extra money you get because of the inflation increase? So if your CPP in year one is $1,200, the next year it might be $1,300 because you got a $100 increase because of the cost of living adjustment. Is the insurer allowed to deduct the $1,300, or they have to always stuck deducting the $1,200? That will be determined in your policy. Usually they're stuck deducting the $1,200 a month. You get to keep the increases. But again, that will depend on your policy. So that is something you want to look into. Okay, here's the part that really, really gets people bad here. So the retroactive. If you've been getting long-term disability benefits in the past and you get approved for CPP disability and get a retroactive payment, almost certainly your LTD policy is going to allow the insurer to be refunded from your past CPP payments. Okay. So if you've been getting LTD in the past and you get a retroactive CPP payment, you are probably going to have to pay all of that CPP retroactive payment over to the insurer. It seems very unfair, but the reality is that is what they're allowed to do under the policy. It's called an overpayment. Again, the idea is that they're allowed to deduct the CPP payment from what they pay you. And so they are just saying, well, it's only fair that if you got paid this past money, so you got paid this past CPP money, any months that past money overlaps with LTD payments that you got, we're allowed to be refunded back because we're allowed to offset it. That's basically how it works. So I often just recommend that you have Service Canada send that money directly to the insurer. That way they get paid. So I've seen many horror situations where the money gets paid directly to the person, and then maybe their spouse spends it on something, or there was some other lien or something on a bank account, and the money can just go, and before you're able to set it aside to pay the insurer, it can get spent by somebody. It might get taken away by some other means, and you're left with not having the money to pay back the insurer for the back pay. And when that happens, you are kind of in a mess with the LTD insurer. They now will want to be paid back, and you're in a situation where you either have to try to find out a way to pay it back or work out some kind of payment plan with them. Otherwise, they're just going to stop your LTD payments if there's no kind of payment plan in place that's acceptable to them. Okay, this next one is just, I hate talking about it, but it is something that is important. I hate talking about it because it's a mess. I have tried to represent people to fight this, not successfully. So it is a complex and difficult area. But you can be in a situation, again, first of all, it'll depend on the wording of your policy. This tax, there's a gross versus net tax issue when you're dealing with what gets deducted. So in other words, CPP disability is taxable. So that means if your payment is $1,200 a month, you don't receive $1,200 because, let's just for simplicity say, $200 is paid to taxes. So you only get $1,000 after taxes, and $200 goes to the government for taxes. Well, what happens when the insurer wants to deduct the full $1,200? So now you're kind of in a mess. You're losing $200 a month that you used to get, right? So if you used to get $3,000 a month for LTD, and now you get approved for CPP disability, and they start deducting the $1,200 a month. So you'd think, okay, that's fine, but I'm not actually getting the $1,200. I'm only getting $800. So they're deducting more than you're getting. Anyway, it creates a mess. This is something you can try to fight with the insurer. Often not successfully, but it can be an area where you have to see how your policy is worded. Sometimes to deal with this issue, some policies will clear it up by saying they're using an ATE or after tax equivalency clause. That way they focus on deducting only your after tax amount rather than the before tax amount. But this is an area that gets complicated. Part of the issue is that from the insurer's point of view, just because money's being taken off for taxes doesn't mean you won't get it back. That is a realistic issue. So even though you're getting, say, $200 of your CPP deducted for taxes, when you file your taxes, you may get all that money back. So then the insurer is saying that's why we're deducting everything. I would just say if you feel like you fall into this area, it is worth looking into, but it is a very challenging area to try to get the insurer to recognize that that they are deducting too much money and you're the one kind of left with less. Anyway, I'll leave it at that. But if you feel like that's your issue, that is something you can look into. All right, so common policy traps. These are ones that come up. So the obvious one I've already mentioned is the child benefit deductible or is it not? It will depend on your policy on whether it's deducted or not. It can also sometimes depend on the child's age, but ultimately it boils down to how the policy is worded and how it describes the offset of the child benefit. Okay. After 24 months, so the next one is the any occupation. So when you move from own occupation to any occupation, usually after 24 months, at that point, the definition of disability changes just because it changes in a way that very much aligns with CPP disability. So CPP disability is focused on any occupation. When you hit 24 months, it also focuses on any occupation. However, the definitions are still very different. They both mention any occupation, but the income threshold for what counts as total disability is very different. As I already mentioned, with CPP disability, the income threshold for what is a substantially gainful income is like they deem it to be around $21,000, whatever 12 times the maximum CPP disability benefit is in any given year. So it's right around that. With LTD, it can be much higher. So like with CPP disability, you would only qualify if you can prove you lack the capacity, you lack the ability, not opportunity, like you lack the ability. Even if the job was available, you couldn't do it, to earn at least $20,000 a year. With LTD, the any occupation is typically indexed to 60 to 70% of your pre-disability income. So that is often going to be much higher than $20,000. So in theory, with long-term disability, even if you're into the any occupation, you could still be disabled from any occupation as long as you lack the capacity to earn 65 or so percent, 60% or more of your pre-disability income. A little bit complicated, but it's just something to keep in mind that these are not equivalent terms. So any occupation disability for long-term disability is not the same as CPP disability. Most often CPP disability is going to be a higher level of disability, much harder to prove than it is going to be to approve you for the any occupation disability found in most group policies. Other things, there are other offsets that can come off your benefits for things like severance, workers' comp, EI sickness. They can all interact with your LTD for deductions, and that's important to keep in mind in addition to the CPP. And I don't have it listed here, but another point I had was return to work. If you go back to work part-time, the insurer may deduct part of your income and still have to pay you long-term disability benefits. This is another area that is very policy specific. I will tell you that no matter what the policy says, insurers are very loath. Like they do not want to have situations where with a group policy, they have someone who is working part-time and receiving LTD. They don't like that situation. Insurers will do that in policies that are designed to have things like residual income benefits and all these types of things. But in a standard group policy where there isn't like a residual disability clause, they do not want a situation where they're paying someone who is working. Okay. They want it to be all or nothing. Now, depending on the wording of your policy, though, your policy could allow it. So it's something to keep in mind. Just because you're able to work and earn some income, you still could have entitlement to disability benefits under your policy under the any occupation clause. Just keep that in mind. All right, so some practical tips. One of the things is you will want to see the booklet. I won't say the master policy. You often see that word thrown around. It's hard to get a copy of the master policy from the insurer. That is the master policy is the ultimate version that's been signed by all the people. Very hard to get your hands on that. You're often legally not allowed to have it. But you do have to have a booklet that describes the benefits in detail. So it is important to see that the kind of extensively worded booklet, policy booklet, because you do need to see the details. You can ask the LTD insurer if they're deducting benefits on a gross or a net basis. They should tell you that, so you can have an idea whether there's an over deduction going on or not. If you owe back pay, you will have to negotiate something with them. Otherwise, they'll sue you to get the money and also cut off your payments. So if it's just never going to be possible for you to pay it back, then you're better off to be upfront with them about them. But that will result in them suing you and trying to claim the money against you, right? So if they get a judgment, then they can try to enforce the judgment. The only way around it for you would be to declare bankruptcy if that was what you had to do. But otherwise, they are often going to sue you to get the money back if you owe a back pay or an overpayment. Okay. Let's just get over this. I don't know if there's any. Let's just see my checklist here that I had. Yeah, this is stuff that we've all really covered. I won't run through everything here. Now, if you need help, you can always reach out to us. We do work nationally on CPP Disability. We can't represent people in every case, but we have our support team that can give basic advice. And certainly you can come on here. That's why I do these daily shows, so people can come on here and ask questions. All right. Now, let's move over to the Q&A. And let me see if there's no questions yet, but we'll wait. There could be some coming. And while we're waiting for questions, I'll check out the Canadian Disability Claim Forum. We always go on there and answer questions. But, we have a question here from Sherry. Let's see what Sherry's saying. Here, I'm just going to go to let's go right here. Okay, Sherry, let's see what you're asking. Received an email from my employer requesting a 30 to 40-minute meeting to further discuss my absence. I have passed the 2-year mark. Is this normal? Must I attend? Okay. Wow. No one wants a 30 to 40-minute meeting. Okay. Yes, it is normal that they would want to check in with you. If you have passed the 2-year mark, the purpose of this meeting is for them to explore if there's any possibility of you being able to come back to work in the near future. So I can only guess, but I would say that this is the first step in them determining, they're just trying to determine, are you coming back or not? It probably, Sherry, is a situation where they're trying to figure out if there's a frustration of employment contract. So just so you know, but you do have to attend. You do have an obligation to communicate with the employer and to let them know what your status is. So failing to attend this, that could be like you abandoning your job if you refuse to attend the meeting. So it'd be like you quit your job or abandoned it. So you do have to attend, but that is what's going to happen. They're going to want to know how are things going? Is there any plan for you are you still working on a plan to return to work? What is your current, you don't have to give, they're not allowed to have specific details. So they just need to know, are you going to be able to return to work anytime soon? They can't claim a frustration of contract unless they have evidence that you are medically unable to come back to work in the near future. So typically they'll start just by asking you. And if you're depending on your responses and things, they will usually follow up that if they're a sophisticated employer, they would also get you to fill out a a questionnaire and have your doctor fill out a questionnaire as well. So that's what I would expect from that meeting. If it's a situation where you are not capable of going back to work, there's no reason to you don't want to create conflicting evidence. Like if it's important that your LTD continue to be approved, you don't want to start making a lot of statements that you think you're going to be returning to work soon, because that could get back to the LTD insurer and that could be sending mixed messages to them if they're under the impression that you're not capable of returning to work. So you have to be very careful here not to give conflicting statements. The big issue I see from people is not wanting to lose their job is that they're concerned about losing their medical plan is usually what it boils down to. Okay. Here's another question. This one is, what's this one say? Employer is willing on a without prejudice basis to arrange for me to be assessed by an independent medical assessment. Does that mean I can't use the independent medical report for CPP or potential legal action against the employer? Yeah, without prejudice, it's interesting. People kind of throw this without prejudice around. Without prejudice, it is used in legal negotiations to mean that we will make an admission on when you say it's without prejudice. It just means I'm making an admission for the purposes of this negotiation, but you can't use it against me later as proof of anything. I mean, I don't know that an IME could be done on a without prejudice basis, to be quite frank, because it is medical evidence. So they could try to say it's without prejudice, but it would be relevant to be used later on. Sometimes I'll see doctors write that on their medical notes, like these medical notes are not to be used for litigation and all this kind of. There's no effect of a doctor writing that on there. Same with this. If you get an independent medical assessment, it is medical evidence that's relevant. So if there was ever a case involving where you're suing the employer or you're suing the LTD insurer, like this is a relevant document that a court would order to be produced. So now, for practical reasons, they could try to prevent you from using it for CPP disability or against the employer. They could try to somehow use it, but to prevent you from using it, but it would be very difficult if you get a copy. But basically, they would do that by not giving you a copy of it. So it is true that they own it, so you may not be entitled to a complete copy of it, but it does include your personal information, so it's kind of a gray area. Generally speaking, you are going to have access to this at some point, especially if they're going to use it. If they're going to use it to say that your employment has been frustrated, they pretty much have to give you a copy of it so that you can defend yourself and read it and see what it says. But it's up to the employer. You can't. Sometimes people will ask the IME doctor, "Can you send me the report?" They have to send it to. This is not a typical medical situation. This is an independent medical. They're a consultant, so they have to send the report to the employer, and then it's between you and the employer on whether you get a copy of that report or not. But again, you could request it from the employer through Freedom of Information. If there's a lawsuit, you're going to get it against the employer. If there's a potential legal action against the employer, you're going to get it. But if there's no legal action, then they can frustrate your ability to get it by just not giving it to you. You could try to get it through a Freedom of Information request. But again, there might be parts of it that are redacted and things like that. Okay, there's a follow-up here. It says, can I get my own doctor to refer me to IME in order to get info? Yeah, you could get your own. Doctors typically, an independent medical assessment is where you're paying a doctor outside of the normal Medicare process. So you don't even need a doctor's referral for an independent medical assessment. You would just, if your doctor was going to refer you to someone, it would be more for a medical consultation. It would not be an independent medical. An independent medical assessment is one that is done for the purposes of litigation or insurance claims, so that the focus is on getting all the information necessary for people who are assessing disability or injury, but injury damages and all these kinds of things. It's hard to kind of get your doctor to refer you to someone because that is not really how doctors work. They don't really refer people for independent medicals. They would refer you for a consultation, but it would be a medical consultation focused more around your treatment and not really focused around answering questions relevant to determination of disability, medical, this injury claims, these kinds of things. Generally, in these situations, it's just best to go with whatever doctor they're referring you to and go in with an open mind and see what that doctor says. You can then challenge if that report comes back and it doesn't seem fair. It can be challenged by you and your doctor. That's usually the best way to do it. But the employer is in the context of a complicated return to work with disability. The employer getting an independent medical is a reasonable thing to have happen. So even if you offer to do your own, the employer is still likely entitled to get their own as well. So they probably want to get their own. If I were you, I'd cooperate with the process. These are great questions, by the way. Very good questions. All right. I'll wait for some more questions. In the meantime, though, I'm going to pull up the disability claim forum. There we go. Using a new browser. Okay, yeah, this seems like it's working. So this is the disability claim forum. I own this forum, but I don't do most of the answering of questions. Most of the questions get answered by other users of the forum. It's focused on answering, getting community answers to your practical questions. There was some stuff here on about the Canada Disability Benefit. Okay, I got a note from Jammer. You can see he added me, so I got a message on this. So Jammer is saying that, so for the Canada Disability Benefit, one of the questions we have is, will long-term disability insurers want to deduct that payment from your LTD benefits? Jammer is saying he got in touch with Sun Life and they told him no, they wouldn't be doing it. And so Jammer is saying that Sun Life told him, please be advised that this benefit has no impact on your long-term disability benefits. This information is for your records. And Jammer saying he asked them in a hypothetical because he isn't getting the Canada Disability Benefit this year, but he might get it in future years. He's saying, I would say ask your own insurance company, but it would surprise me if a frontline person says it is a clawback. It wouldn't surprise me if they say it's a clawback. Maybe. I think certainly with all the policies that are out there right now, it'd be very surprising to me that if any of them had the ability to offset this Canada Disability Benefit. Future policies, because again, like things like this have to be specifically listed in the list of offsets. Like there's 1, 2, 3, 4, 5. So for the Canada Disability Benefit to be offset, there would have to be one of the deductions would have to be a very broadly worded, like any benefit paid from the federal government or something like that. And that kind of clause is also a problem because it's too broad. So it's unlikely that most policies now will have the ability to offset the Canada Disability Benefit, but when these policies come up for renewal, they can change things and maybe they'll start putting new wording in new policies. That won't affect you if you already are on a disability claim because the rules for your claim are already kind of frozen in time at the time when your disability started with the policy that was in place at the time. But for people in the future, if someone who hasn't made a disability claim yet, and when the policy renews, they add this wording in and then they make a claim, well, those kind of people could get affected. Those people could get affected. All right, what else do we got here? CPP Disability, federal pension and LTD, what you owe. This is probably going to be way too complicated to answer on here. Yeah, that one's too complicated for us to deal with here today. Payout amount question. This is probably easy. Says here, I'm currently on short-term disability. It's slow going as I have multiple ailments. With how slow the medical system is, I don't even have a diagnosis yet. That's not unusual, let alone any sort of recovery. My max short-term disability weeks would be reached in the first week of January. Okay. Currently, my payments are calculated using last year's income. If I was to require LTD, would the calculations be done using the last pay stub of 2024 or 2025? If the 2025 with the STD payments being only 65. No, it would be based on the normal. Buckets is answering this correctly. So this person just wants to know, will the LTD be based on the reduced short-term disability amount, like a percentage of that, or will it be based on the original income? And it will be based on your original income. Another question I have is, do I have to report a 10-day vacation to Sun Life in advance? The only reference in the policy to out of country is you are absent from Canada longer than 4 weeks for any reason unless you are pre-approved in writing by the plan administrator. Yeah, I would tend to agree with what Buckets is saying here. So it looks like this policy wants you to report if you're going to be gone for 4 weeks, longer than 4 weeks. So if you're less than 4 weeks, 10 days, less than 4 weeks, so they should be fine. Yeah. Yep. I agree with those. Okay, we got another question here. Can you please clarify what do you mean by being too broad for offsetting any government plan? Well, there are certain benefits that are not from the government that are not considered income. So you run into issues where there can be a debate between something that's a social benefit versus income. Like you might get for example, like you might get a payment from the government for, let's just say, the child tax credit or benefit or something like the child benefit. There could be any type of like the HST rebate. Like there's all these types of payments that are generally recognized as not being subject. They're not considered income. They're considered a social benefit, whereas LTD is focused on income. So if the wording of a potential clause is too broad to cover just about any type of payment from the government, you run into that kind of problem with that clause. So the clause would be open to someone challenging it as being overbroad, allowing a court to just strike out the clause completely. That's why generally these clauses are worded more specifically. They might be defined as an income payment or from the government or something like that. Usually you don't see clauses that would be worded so broadly to capture any type of payment coming from the government. And there's a legitimate question over whether the Canada Disability Benefit is a form of income or if it is a social benefit. Well, that is the question. Is it considered a social benefit? I would say probably yes. It is considered a social benefit. It's not like CPP disability is kind of tied to your income. Sorry, CPP disability is similar to another disability plan because you've paid into it. It's paying, and it is a monthly payment that you get. Whereas the Canada Disability Benefit is closer to me to a social benefit that is not something that would be deductible. But I'd have to put more thought into it, honestly. I'm just kind of speaking off the top of my head here, but this is my thoughts on it, that the wording of these policies is not going to have a clause that's broad enough to include the CPP disability. I definitely say you should report it. So just don't give your insurer any chance you should just report the Canada Disability Benefit on your annual reports. I would report it and see what they do. They're likely not going to deduct it. If they do deduct it or they're going to plan to deduct it, you could have someone like me review your policy to see is this something they could properly do. But I got to think they're not going to. I think that's the most likely thing that's going to happen. They're not going to deduct it. All right, here's a follow-up on the employer asking about the IME. Can the employer terminate benefits before getting an IME assessment? Can the employer? So I guess, is this a situation where your employer is paying you short-term disability, like salary continuance for short-term disability or something like that? Or are you saying can the employer terminate like group medical benefits before getting an IME? Generally, I did LTD. Okay. Yeah. Typically, yeah, they could. They could if they think that you don't meet the criteria for LTD, they could technically terminate benefits before getting an IME assessment. But let's be honest, usually they're going to be more careful than that. And the whole point of the IME assessment is to determine eligibility. So they generally would get the IME assessment and then base their decision to terminate based on the LTD. Now, for group medical benefits, the only way they would terminate group medical benefits is if they are allowed to under the terms of the group medical benefits. So sometimes group medical benefits have terms that say that they can only be paid so long to someone who is not actively working. The only other way, so that's one way they can terminate, but if the employer has a plan that allows them to continue to be paid for someone who's quote unquote employed, even if they're on a sick leave, then the only way they would terminate group benefits is if they terminate your employment. So the IME in this case, if the IME in this case is to determine that you have a permanent disability and are unable to return to work, then the IME would allow them to terminate your benefits for, well, it would be evidence that they could use to terminate your employment for frustration of contract. Thereby, when they terminate your employment, it would also terminate your group benefits. So the group benefits, just the short version here is, generally speaking, group benefits aren't going to be terminated based on an IME unless it's linked to a unless the IME is confirming that there has been a frustration of the employment contract because you are completely unable to return to this type of work anytime in the foreseeable future. Okay, that was just stuff being confirmed there. Okay, this is just another question the person had about travel. Let me just share the screen here. Says here, I'm going to be away for around 11 days and LTD has approved me. However, I'm also on CPP disability. Do I need to let them know as well? Nope. Have a great trip. Yes, I agree with that. Don't need to tell CPP. CPP they don't care. They will pay you if you're out of country. Where you run into problems is if they're trying to get in touch with you. If you're gone for like 6 months or something, they're trying to get in touch with you and they don't hear from you, they will stop your payments as a way for you to reach out to them. But that's a pretty extreme. If you're going for 11 days, not going to be an issue. All right. Okay, folks, that's pretty much where I got to today. I'll be back tomorrow answering your questions again. So hopefully I'll see some of you guys back here. I thank everyone for showing up. We had a good showing here today. A bunch of people, a lot of questions being asked. So come with your questions tomorrow. We'll do the same thing. Look forward to seeing you all. Have a good evening. Bye-bye.